I believe that the year 2021 could be the year of rapid grocery delivery or on-demand economy itself. We were in e-commerce, now it rapidly became Q-commerce, and the expectations and the standards are different. It's the fight of building the infrastructure and who has it first.
I was the first person to recommend Amazon to acquire Whole Foods. I did that in 2013. I was the worldwide expansion leader. And one thing jumped out at me more than any other. Consumers absolutely were wanting things faster, the need for speed. The argument I make is consumers are going to very quickly start asking this question. Why is it I can receive my groceries in 15 minutes, but I can't receive a handbag, cosmetics, apparel, shoes, electronics, and other products? And that's what we're going to be seeing in the future very quickly, is all things retail being delivered much faster. That's where the growth is at, not delivering low margin grocery.
You mentioned that the new players whom we are going to discuss now, well, they're not new. They're $1 billion companies there already after this year, but they have an advantage that they can see already the mistakes that were done by the fathers of Getyrs and Samokats and these kind of companies who did it before. But I think that the biggest advantage that these companies have is the not just experience, but the knowledge of and the sense in the blood to count money. And in the end, it helps them to make less emotional decisions in terms of how to spend it, rather than it can be a stopper in some way, because this market needs a lot of capital, and it's not even a question. But also this understanding, let's say for me, from the Samokat founders, the fact that they were doing magnet, and already in the early 2000s, they were opening a couple hundred stores per month, physical stores, in the times when there was no technology, no internet in the sense of what we have it now. There were no mobile phones and things like that. They were opening huge and smaller fulfillment centers to work with all that stock and work on big geographies. I think that it is a huge advantage when you have it in your blood of having taken everything the best from traditional retail and bringing it to the completely new kind of area of and vision of consumption. This is, I think, one of the biggest advantages, and this is why I believe that Gopuff and Getyr also, of course, and the older players, they were tested with time, and I think this is one of the biggest advantages. They know what kind of to expect, how not to get shaken by the first bad moves, or not the first ones, or the 10th, or the hundreds, right? And they know how to get experience from their mistakes. And that's why Gopuff sees, I believe, these trends, right? Because they were starting selling hookah delivery, right? It was nothing close to grocery. And now they're going into the rapid grocery delivery. I agree with you that they need a lot of funds, a lot of talents, and a lot more acquisitions, but they have the funds, right? And that's the second topic, the second part of the question. After COVID, so much money. Weezy gets the first funding. Yandex goes with Yandex Lavka. Glovo shares its interest and invests millions of dollars, euros into the micro-fulfillment, claiming in the early 2021 or maybe even late 2020 that they will open 100 by the end of the year. And also Delivery Hero put in the huge number of dark stores, more than 1,000 up to date worldwide of micro-fulfillment centers. And then Gorillas, Dija, just with a pitch deck, the first funding, 20 million. Then Flink, Jiffy, Kazoo, Jokr, Block, Fancy, Bike, all of these brands worldwide. In Australia, several brands. In Canada, in the United States, 1520 and Fridge No More. A lot of people stepping in, and a lot of funds. Could you share with us, why do these companies need so much, and how much more will they need?
Well, the reason why they need so much is what they're doing is following a model called Blitz Scaling. What Blitz Scaling entails is that you raise as much capital as you can, and then you go launch your operations in as many locations as you can, as quickly as you can. And the goal is to get as many customers as you can. When you operate like that, you rarely become profitable. In fact, you lose money on almost everything that you do, every order you fulfill, for example. So the reason why capital is so important, and I use this phrase, when you are blitz scaling, companies live and die by the capital they raise. It's simply a fact. And so they wanted to raise as much capital as they could in the beginning. They went out, they all launched operations, but very quickly they started to run out of capital. So they then had to raise more capital. Then they launched more operations, but none of them were profitable. They started to deplete their funds. So then they had to raise more capital. And the best example I think we can use in this regard is gorillas. So I think you have to say what company really deserves credit for influencing rapid grocery delivery. And I always say it's gorillas. It's not Getter, it's not Samokat. A lot of people still don't even know who those are. There are lots of people who know who gorillas is simply because they did such a great job of marketing. So I believe Con Sumer, the CEO and founder of gorillas, he absolutely deserves the credit for being the individual who should be looked at as saying, what one person really did the most to get this going. And I've always said, I believe Con is that individual. But what Con really did that was smart is that he didn't go out and say, I need to raise 200 million and then 300 million. Con has the attitude that he must be in the process of raising billions every single day, every single week. He literally is on a continuous fundraising cycle because he knows the only way that Gorillas is going to be successful long-term is he has to be receiving capital long-term. It's going to take several years for Gorillas to be profitable anywhere. Now, that's going to be interesting what they've done with Tesco. It's absolutely possible that Tesco and Gorillas could expand this into many locations. And I know for a fact that Gorillas is in discussion with other grocery retailers. Full disclosure, I have contacted Gorillas and I have recommended that they actually provide services to one of my clients. So I'm encouraging them to do that. But what makes Gorillas unique is that Con Sumer knows he must be continuously fundraising because he must fund all of the operations, not the operations, just the new ones they're opening, but he has to fund all of them that have already been open. And these are really expensive endeavors. They lose money on every micro-fulfillment center. They lose money on every order. In some areas, they're getting better. They are starting to break even, but it's going to take several more billions of dollars for Gorillas to be able to just survive. And then it's going to take several billions more for them to be able to thrive. So here's the problem with the rapid grocery delivery industry. They still have to be able to become relevant. And this is what's important. They are certainly selling their services, but they're not relevant to most consumers. Most consumers look at it as, wow, it's neat. I can get groceries in 15 minutes. It's not like they've come to rely on Amazon. Most consumers who do business with Amazon, they rely on Amazon on a weekly basis. They are constantly ordering something from Amazon. So for Gorillas to achieve that, they have to become relevant. They have to become relevant in the eyes of the consumer. And that's going to take money, but what it's really going to do is take time because consumers have to become accustomed to a service. They have to adopt it, and then they have to convince themselves they can't live without it. And it's at that point, that's what Con Sumer is betting on, that Gorillas can convince a large number of consumers globally to find Gorillas relevant and that they find that they can't live without the service Gorilla provides. And when that happens, then that's when Gorillas starts expanding into other categories, cosmetics and apparel and shoes and many other things. So Khan understands this. So it's not that I've seen people criticize him for raising money or say, well, he's struggling because he's raising money. No, he's doing the only thing he can do to survive. He has to fund a new business.
And the only thing that he needs to do, I believe that the main differentiator of I don't know if we can say it like this, old school and new school, is the fact that the new school who came and saw that, okay, this business model is working, these guys are doing stuff. What are they doing? They are delivering 15 minutes. I'm going to do the same. Okay, but what do I really need to do? And what I think that Gorillas understood the best is that they need to invest in marketing the most and into B2B marketing. Because I look at all the companies from the marketing perspective, due to the stuff I do and the services that I provide. And what I noticed from the beginning is that Gorillas were much more active on LinkedIn, where the money is, than promoting on Instagram and Facebook. Yes, a lot of funds were there as well. But the way that they positioned themselves from the early beginning on LinkedIn got them such a strong position with the talk with investors. Right? They were showing the picture that they were expanding like crazy from the early beginning. They got everybody excited with their brand. They started working with the brand from day one, with low funding, with whatever ways they could, but they started doing it from early beginning. And look, the major first investors in the whole industry were with Gorillas, right? DST, Tencent. This is huge. And he understood that he needs not just billions. Well, it's my assumption that he understood, but this is what he did. Not just billions, but smart billions. Tencent, DST Global, Delivery Hero, Tesco. He's not afraid to get the bigger ones to show that he is ambitious. They're going forward. They need the money, and they're going for the stronger ones. Not just some money from some capital. This is at least the pattern that I see from the kind of marketing perspective. And I think that it is the best step. And they did understand the game that they will need a lot of money. It's not about a couple $100 million to get me through the season. There is no season, right? You said billions of dollars are needed to be and to stay relevant.
Correct. And I think you have to give Gorillas an edge. I think they're absolutely going to continue raising capital. I think most companies, most investors look at them and say they have an advantage. They're certainly a company we think can win this or be one of the leaders in this globally. So I agree. I think we're going to see Gorillas continue to do what they're doing. But it'll be interesting because I do believe we'll see Gorillas make changes to their business model. And I think the thing that Gorillas is going to be looking at is this. Is it possible for them to back off on the number of micro-fulfillment centers they open? And basically say, how do we instead leverage a lot of these retail stores that the grocery retailers have? So if they partner with a retailer in the United States, let's say they have 2,500 stores, 2,500 stores, well, that's an ability or an opportunity for Gorillas to say, I don't need to open up a lot of micro-fulfillment centers. I'm just going to have a radius of 15 minutes around each store. And so that's something that they can scale, they can expand without having to make a lot of investment. So I hope that they embrace that model. They're never going to go away from micro-fulfillment, but certainly I think they're going to create more of a hybrid model. At least that's what I'm anticipating.
Like actually Samokat did. They have the micro-fulfillment centers and the bigger fulfillment centers with more SKUs and longer delivery, but this way they can do their work with their stock more efficiently. Absolutely. Yeah. And what do you think about, there are still a lot of players in the market, not just Gorillas. There is Flink, who became a unicorn, who is developing rapidly and quite efficiently, I believe. There is still Jokr, who is in LATAM, in US, and is growing in Europe, and has a very talented team of veterans of the food and on-demand delivery industry, right? And there are a lot of other companies like Zap, like Kazoo, like Jiffy, like No Fridge No More, would they all still need as much funding as gorillas? Does it really depend on the ambition? Should we expect the same pace of them getting the money? How do you see it for a little bit smaller players, right? Like Wheezy and the story around all the market of UK, which is full of rapid grocery delivery companies. What do you think? How is it going to wrap up, at least from this year perspective? We're going to talk about like what's next a little bit later.
Well, all of them are going to try and ramp up. All of them are going to try and raise capital. But I'm already seeing that investors are able to have a better understanding of what model works better than the others and which companies are really able to deliver a better service than the others. Gorillas is able to deliver a great service. Gorillas is able to raise capital, although they received a lot of negative press in Berlin and several other countries. Now, I criticize Consumer for not jumping on that bad news sooner, that bad press. To his credit, he finally did so, and I think he really learned a valuable lesson. He's got to make sure that Gorillas is always looked at as being a positive influence in the community, a positive resource to customers, and that Gorillas, under no circumstances, ever tries to do anything that harms anyone, harms the environment, whatever. So I think Gorillas is going to continue to raise capital. But what about a company like Wheezy? And now I was the first person to write on LinkedIn that I believe Wheezy is basically terminally ill. And I wrote a LinkedIn post not too long ago called Wheezy's Last Breath. And I had an awful lot of people reach out to me and they said, so does this mean that you don't think Wheezy can raise capital? And I said, had Wheezy been able to raise capital, I would have never written the article because they wouldn't be having the problems they're having. And so already we have to be mature enough to say, we know there are going to be companies that win and companies that lose. And so I think Zap, Jiffy, Wheezy, Glovo, some of the smaller players, not Glovo, some of the other smaller players out there, they're going to struggle to raise capital because, again, if I'm an investor, I have to say, what can they really offer me that a Gorillas can't, or a Deliveroo with their new service, Deliveroo Hop, can't deliver? So what I really, as an investor, want to continue investing in these smaller players that are going to struggle to grow and who are going to lose market share to the larger players. Would I continue to invest in them? Would I recommend anyone invest in them? And I've always said no. So I think what we're really seeing already is that there's a desire on the part of many, many of these companies to attract capital, but they're not successful. And I think Zap and I think Jiffy and several of these other companies, they have one thing that they offer. I can deliver groceries fast. But do they have the scale? Do they have the pricing? Do they really have a reason to choose them over a better, well-known brand? And that's the thing I think is going to hurt these companies. So yes, on the surface, every one of the rapid grocery delivery companies, every one of them is going to want to attract capital. I think it's already started. Throughout 2022, you're going to see many of these companies just simply fold up or get acquired or go out of business because investment capital is already drying up for many of those smaller players.
But it's very interesting because the period that we are discussing is a year, right? Last year, around November, Gorillas attracted their first capital, Dija in December, if I'm not mistaken, and then all of them started. Like, everything is so quick. Do you think the opportunity also lacks so quickly that, for example, Jiffy just recently raised their money, right? And it was in September or October, and also Jokr in summer raised 125, and they were already quite well funded and backed by SoftBank, right? And there are still companies who are looking for money. Zap attracted 100 something million in the not so long ago. Like, we're really talking about such a short period of time. Do you understand that a lot of things are happening, a lot of acquisitions are happening already, and we would take a deeper look into this? But from the perspective, do you really think that in this year, is it already like so fast that next year people will not invest in them anymore? Because there are still new companies that get on the market, like in India, in Greece recently, and in Egypt, and they're getting new money. More new companies are stepping in.
Oh, true. But let's make sure we have some understanding of what are we really referring to. So yes, absolutely in India. I can't remember the name of the company. It's $60 million they just raised.
Zepto.
Yes, yeah. So they raised 60 million because it's a new market for rapid grocery delivery in India. I've spent a lot of time in India. I've designed many logistics models for companies in India. You have all the Kiranas, those little mom and pop stores. There are millions of them throughout the country. So a lot of people thought, well, you could never do rapid grocery delivery in India. And I never believed that, but I wasn't seeing anyone come up with a model, and now they have. So yes, I think India is ripe for additional last mile rapid grocery delivery companies to come in. Certainly. Egypt, absolutely. I think that's a wise market, a wise investment area. But what about the United Kingdom? What about the United States? What about other parts of Europe? Do we really need to have, does Brittain Ladd need to come out with Britain's rapid grocery delivery? Should I come out with my own rapid grocery delivery company in Great Britain called Brittain's, faster than anyone else? Now, I'm lucky because I have a name, Brittain Ladd, and it would gain a lot of attention for me. It gained a lot of attention for me in the United Kingdom, but am I really going to be able to offer a service that doesn't already exist? And other than my cool name, because it's Britain and I'm working in Great Britain, would I really be able to generate something new? And that's what investors are looking at. Also, what investors are looking at is this. There are companies you can invest in that incur losses. When you invest in a rapid grocery delivery company, it's not that they possibly may lose money, it's a guarantee. I've never seen a business model that has a faster cash burn rate than rapid grocery delivery. It is unlike anything I've ever seen. And so what a lot of investors have had to come to the conclusion on is this. We certainly believe there's going to be a winner in rapid grocery delivery. But is it going to be from one of the new entrants, or is it going to be from one of the established players? And I believe it will be from one of the established players. I've yet to see how a new entrant that comes on the market is going to offer anything other than, I'm going to use bikes, scooters, possibly teleoperated robots, maybe some vans to make deliveries. It's not as if someone's going to come on the market and say, I'm going to beat everyone because I'm using magic carpets. I figured out how to use magic carpets. Or I'm using only drones. I'm using drones, or I have delivery people who have jetpacks, and they basically just jetpack from one customer to another. That's not going to happen. So if someone isn't entering the market with a new technology or a new business model, why would you invest in them? They have nothing that they can offer that's going to disrupt the established players. And that's happened very quickly. So I don't want to give the impression that there won't be new companies coming on the market. But what I am making the argument on is this. Should I, as an investor, invest in the new companies coming on the market? Or should I find a way to keep investing or invest in the established players that have proven they can make a change to the business model. They can achieve market share. They'll eventually achieve profitability. And the other thing is, should I look for other ways to be investing in this space? So in essence, instead of me investing in rapid grocery delivery, maybe what I should be looking out for is, who is that company that says we are real-time retail delivery? We're not grocery, we're real-time everything. That to me is the next big thing, and that to me is the company to invest in, because they have a much greater total addressable market that they can serve than just groceries. So yes, although it's only been a year, I'm expecting to see many companies go out of business in this space next year.
And we are definitely going to touch this topic once again in a little bit. But let me just let's go a little bit deeper. Let's say I am doing my delivery, Soroka, 10 minutes delivery, groceries or whatever. My argument to the investor would be, hey, yes, there are a lot of companies, there are a lot of funds, but I'm early. You can buy a bigger stake. I can still deliver. at least the same service. I can still compete with them. I have learned on all of their mistakes. I have all the knowledge. I have all the experience. I can do it. I can scale it. And there is still so much room because Poland, it's basically only Jokr, right? In CE in general, there is not much of this model implemented. And there are smaller players, right? But no one major, really. Still, half of Europe is still not covered. And going deeper into the markets, US is an immensely huge market. And even though they have a lot of companies already, it's basically in New York. Los Angeles doesn't really have anything. And I mean, the whole coast doesn't have anything. Food Rocket, Gopuff just launched in Los Angeles, but still it's not the same, right? In Chicago, it's basically 15, 20 and Get Here. Yes, all of them have plans to scale there and whatnot, but I still can be a valuable asset. Even if I'm not as good as I think, I will have the infrastructure. I will have the experience valuable for the company who buys me. I will have the team. I will still create an asset, and it won't be as much of a cash burn for you, as much of a ticket to this whole big dance, because it is the next biggest thing. And if I were Zap or Jiffy or Wheezy, this is how I would be selling myself, that I still have a lot of opportunities and there is still so much room on the market, because I'm not really fighting with gorillas. Gorillas are helping me to explain to everyone that this is the business model that works. And if later grocery is not the best fit for me, I will still have the infrastructure to sell, I don't know, on-demand delivery stuff for construction, of medicine, which is another thing that is popping now, right? In Germany, with these companies who are going to do on-demand delivery of medicine, I'm sorry. And there are companies, Arrive, the name is Arrive, who is claiming to do on-demand delivery of everything, and they got their funding. Of course, this couple million is not enough, but it's a base for me to say that, okay, guys, I already have spent all this, I already bought this much experience, I already bought this much of infrastructure. I know how to take it from 10 to 50 to 100. And worst case, even if I'm not that good and talented as I believe, I will still be a massive kind of capital, a massive infrastructure piece, which would be valuable for Gopuff, for instance, who bought Dija and Fancy, right? Why do you think that this? Do you think that this is not good enough? Like that there is still so much room? Yeah, you can go buy from gorillas, but how much is the stake there? How much would you really be allowed to buy when all the big guys are already there, right? And I am an ambitious young. I'm like Bitcoin. I might go from 0 to 1,000 in a day, or I might not. The time is so small. Everyone is an infant. Why do you think I cannot make it rather than the other guys? I have already attracted some stuff, some money, talents, experience, and I already have something. Why would you let me drown instead of like helping me with smart money to go further?
Oh, I agree. And I understand your argument completely. So let's look at some interesting facts. And again, because of my position, I have NDA with a lot of these companies, but I'm going to tell you a story. It's a quick story. So a very well-known rapid grocery delivery company entered a new country. And after 1.5 months, and after spending nearly $7 million, how many orders do you think they were averaging on a daily basis?
Micro fulfillment, very well known, like the pure player, right? Not someone new.
Yeah, it was. You could call them one of the pure players. They're one of the more well-known companies.
Okay, but that existing player just entering a new market.
Correct. Existing player entered a new market.
But $7 million, I don't know, like daily, like 30 to 50.
That's pretty good. Yeah, it was about 23.
Wow.
23 orders a day. 23 orders per day. They have no hope of being profitable anytime soon. So their investor said, well, let me take a look at some of the smaller players, the established players in the country. And they went to them, and they basically were looking for someone like you who had the infrastructure. So they went to them and they're like, okay, well, we know these guys have to be selling, fulfilling 100 orders or more a day. Surprisingly, they were in that 17 to 35 range. So the investors were like, wait a minute, what am I really investing in? Yes, I certainly can see the potential of rapid grocery delivery. But what I'm not seeing is the adoption of rapid grocery delivery in this country by these consumers. And so what they did was they chose not to invest in the smaller players. They chose not to acquire any of the smaller players. And instead, what they've done is they've said to the established player, you're going to have to continue to scale, and you're going to have to continue to take the losses because you at least have the brand name. And this was what was so fascinating. This is a company that didn't originate from this country. They're from a completely different country. Yet they had the leading brand name of all the rapid grocery delivery players when they surveyed customers. So although this country had several smaller established players who were doing business in the country, this company I'm referring to had a better brand name. And that's why the investors said, I'm not going to invest in any of the smaller players. I'm not acquiring them. I'm going to continue funding this company because I believe it's because of their brand recognition that they'll eventually build up the number of orders we want per day. I've also spoken with several of these companies that are very well known. And I've had this discussion with them and I'm like, it's interesting. You're small, but I think you're doing a good job. And they're like, we are doing a good job. But what we're struggling with is our ability to scale and our ability to show our investors how large we can become. And what the investors say to us is that you're a neighborhood company. And they said, well, what does that mean? And they said, you're only able to serve certain neighborhoods because that's what you're doing today. You have no ability to serve, to scale this and serve this entire country or multiple countries. You're a neighborhood rapid grocery delivery company. And so what they're struggling with is trying to convince investors, I may be a neighborhood company today, but if you give me 10 more million, I'll be able to scale nationwide and I'll be able to be a major player in this country. And then I'll be able to scale outside to other countries in Europe. The investors are not buying that argument because they've only seen a few companies that actually have done it. Certainly Getter, Gorillas, Delivery Hero. Now you have Gopuff. They did acquire Fancy and Dija. So these companies,
Jokr.
Investors are.
Jokr is also quite international, right?
Yep, and Jokr. And so these investors are saying what we're looking for is the ability of these companies to scale fast and to scale massively and do so incredibly fast. And so these smaller players, unfortunately for them, although I can understand your argument for why an investor should invest in them, what these investors are telling me is that they've made their bets, they've invested in some of these larger players, and they're pretty much only willing to support the bets they've already made. So although Gorillas and Jokr and these other companies are going to continue to lose money, what these investors are telling me is that, yes, they're going to continue to lose money, but they have an ability to actually stabilize at some point, become profitable, go public. How am I to make the argument that Zap or Jiffy or some of these other smaller players, regardless of how well managed they are, regardless of how motivated the management is, can I make the argument that they're going to be able to establish the size of Getter or Gorillas or some of these other companies? And they're saying to me, no, we can't. And so that's why they're not investing in them. Now, I could be wrong. It could be that eventually they change their mind and say, you know what, this is really a great little company. They've got a great future. That's someone we can believe in and we can help. There's room for them. My argument is not every little company, no matter how positive they have someone like you speaking on their behalf, Not all of them are going to be able to receive capital. And I know that for a fact because all we have to do is look at the history of business. There have been periods where multiple companies have entered a market and they all said, we're good, we all can do it. But did all of them receive enough capital to survive?
Oh,
and
yeah,
the answer
absolutely.
is no. So that's all my argument is.
Absolutely. Yeah. But I talk with different companies, right? It's not just smaller ones or bigger ones, all of them. And I understand your logic. But at the same time, another argument pops up from the smaller ones, right? The ones who are like on one market or in several markets. And the argument is we are small and local because we do not want to burn as much cash going abroad. We want to work on our business model, make sure that it is as good as possible and it makes all the margin and the unit economics works. And look, our unit economics is better than the other one of the competitor. And it does make sense. This is what Samokat was doing for a while. This is what Getir was doing for a while. And this is actually what makes them strong, right? For example, the company called Jiffy, they have a very strong management from X5 retail group and experienced investors who have several projects in this industry. They are small, but I'm pretty sure that they're working on this efficiency, right? It's in Russian blood to have business positive. They cannot be burning cash, right? And I'm pretty sure that this is one of the reasons why they're not scaling, because they want to justify this stuff. Yandex also stayed local for a very long time. Of course, for the Russian businesses, it's kind of a different story from the investment perspective and the cultural perspective to scale to other countries and other markets. And Russia itself is quite big, so they have quite some room to fight about. But let's take a look in this smaller startup, right? Which keeps on attracting funds and has quite talented management, right? What do you think about this argument?
Oh, I agree with that completely. So one of the things I like about Bike, for example, I think Bike has it right in terms of what they make the argument on is that there's no reason why they shouldn't be profitable wherever they operate. And the reason why they believe that is what they learned during the time of operating with Samokat. Samokat made the same argument. There's no reason why we can't be profitable. We shouldn't operate without an understanding of unit economics. How do I reduce unit economics to make my company profitable? And so if I'm an investor and I have an opportunity to invest in Bike or invest in a company that has that type of a management philosophy, who says we are intentionally staying small, we're perfecting our model, but this is what our growth plans are. And this is how we know we're going to be profitable where many other companies that have tried to scale have failed. This is our strategy. Now, that's going to give me a lot of interest because if the management team has proven this or has this experience working at X5 or Samokat or some other company, that changes the equation. Now we're not talking about some of the traditional or some of the usual rapid grocery delivery companies that come on the market with no other business model than saying we have couriers, we have uniforms, we have scooters, and we can make deliveries. They have no management that's skilled. They have no software. And let's be fair. I think we can throw Wheezy in that category. What did Wheezy really bring to the table? And there are several other players out there that said we can make deliveries, but they had no understanding of unit economics. They didn't have a business model where they believed in the same type of principles of Samokat or Bike. And that's why when I was asked several months ago, and I wrote this on LinkedIn, who do I think is the best company on the market? I said, I believe it's Bike. And I had all kinds of people and investors and the press, and they're like, how could you name Bike? No one, they just started. How could you put your reputation on them? I said, no. They didn't just start. They've spent over the last 2 years learning how to run a successful business. And now they've launched in New York and they're going to apply all of those lessons learned. And it is my belief that experience is by as the best micro fulfillment company, the best rapid grocery delivery company on the market. The only one that comes close to them, I think, is Getter, and then followed by Gorillas. But I think you have to go with what you just described. Yes, that changes the equation. If you're sitting in front of me and you lay out a business model of this is how you're going to be profitable, this is how you can scale and be profitable, I'm investing in you, guaranteed.
Whom would you name at top 3, top 5 companies of the year? Who do you think is going to stay there in 2023, 2025 from this prospect of several years ahead? How do you feel about the market itself in general from the perspective of people who are working in these companies? The top 5 people of the year, let's say, if you could name five managers or founders or investment capital people.
Bike is here and the other companies are here. That's how much difference there is. Bike is really at the top of the mountain. But what they would do is say, we are now scaling into automated micro fulfillment. We're going to offer micro fulfillment as a solution to retailers. Who's the biggest thinker? Who's the one pushing the boundary? So again, I have to say, consumer to me is the rapid grocery delivery executive of the year. I don't think anyone is better than him.